Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. That means whether the market goes to the upside or to the downside, we as sheeps don't give a damn. We want volatility. We want some price action to follow. And guys, the price action was bearish this past Friday. As you guys can see, we officially lost this multi-month trend line that I had here that I've been talking about. In my last video, you guys know, like, as a price action trader, one of the core principles that I stick with is, what phase are we in? Are we in the chop phase or are we in the trend phase? And when you spend enough time reading the charts and getting to know price action trading and sheep style, there are ways where you can tell if we're in the trend phase or we're in the chop phase. And it does help give the market some predictability. Now, I know I've been saying for years, I don't like to predict. I don't do that prediction stuff. But I will tell you the truth. There are ways where the market can be more predictable, right? There are ways, but you have to be really good with reading the charts. And I believe, like, with my approach, I try to make it very simple or sound simple so that you guys can grasp or get the concept. You know what I mean? I try to act like I'm explaining it to a fifth grader. All right, not that I'm talking to fifth graders or you guys have the IQ of fifth graders, but I want it to be as simple as I can. Okay, so what am I getting at here? Well, if we go back to the 15-minute chart, okay, you guys remember in my last video, Uncle Charles identified the chart range for us. I said 586 up to 591, okay? It was based on the structure. It was based on buy and supply, demand zone, all that happy stuff. But the point is, I gave you guys the numbers. 586 to 591 was the chop range. Now, when we are in this chop range, that means the market is in a chop phase. When the market's in a chop phase, you got to watch out for traps. You got to watch out for setups that give you little to no follow through. Maybe it's good for a level move, but even that can be risky when we are in the chop phase. But once we break out that chop range and get out of the chop phase and enter the trend phase, the market tends to pick a direction. It doesn't mean it just goes straight down or straight up. It just means it's going to build a trend where it's actually going to pick a direction. In this case, once we broke out the chop range of 586 to 591, in this case, we broke it bearishly below 586. The market then started a trend, as you can see with your very own eyes now, a trend to the downside, a bearish one, right? So if you look at my Discord, I try my best to give extra guidance throughout the day. Okay, that's the point of my Discord, is Uncle Charles giving you guidance throughout the day based on the price action. Each setup is another chance to enter a position. So I wrote here at 9:25 a.m. before the market opens to get us ready. Below 586 is bearish. This is very important because based on the chop phase, we needed the price to get below 586 for us to be bearish. The problem with this was when it got below 586, it was during the pre-market. Okay, when we got below 586, that is a 8:30 candle when we had some data release. All right, and well, since we're below 586, and I mentioned we want to be bearish, from there all we had to do was watch for the next setup. I wrote here, so to be bullish, 586 need to recapture to put 587.5 and 589 in play. That did not happen on the 15-minute chart. And I wrote here, if 584 fails, that's the next setup, 582, 580, and 578 incoming. So we look at the chart, we look at the 15-minute chart. What was the next setup? Well, we look at the 945 candle, and you can see we broke down the next support at 584. This is how Uncle gives you guys the level. I give you guys the levels and how I trade it using the 15 to 30-minute chart. You guys can see that. Broke down 584, and it gave us a beautiful move going as low as 579 before we started chopping a little bit. But eventually, we went down lower today. Great stuff. So the plan to be bearish below 586 worked out beautifully, and catching the next setup worked out beautifully. Why? All we did was, there was no prediction. There was no prediction. All we did was identify the chop range. We understand the market cycles between the chop phase and the trend phase. So if we're in the chop phase, we identify the range. Once we break the range, whether it was to the upside or to the downside, as sheep, it doesn't matter. If we would have cleared 589 and 591, I would have been bullish. But instead, we broke down the support of the chop range. So the price action told me, Uncle Charters, you need to be bearish, and you need to tell your followers to be bearish, because the price action is bearish. Not because I'm a bear biased trader, but because the charts said it was bearish. Does that make sense? That is what you can always count on Uncle Charters for. Unbiased price action analysis. I'm not call if you ever hear me call a top, or we're in the process of a top, or you hear me call a bottom, or we're in the process of a bottom, it's not because I'm biased, okay? It's because the price action is speaking. I'm just translating, okay? And I really do hope you guys made money off of this, okay? This was a beautiful move. Now we're gapping down. This is a beautiful move to the downside, okay? And yeah. So now, what's the plan now? Well, 576.5 is where it's at around the pre-market. I have Fibonacci resistant level now at 578, and then 580, 582, and 583.8 all above. If we are to get a bounce, these levels must recapture, okay? I don't like to call bottoms, but when we do get a bottom, it usually starts with a lost level recapturing, okay? And I'm giving you guys the levels: 578, 580, 582, and 583.8. These levels must recapture to trigger calls, all right? Now, if we're below 578, that's still overall bearish, and breaking down next support at 576 and 574 would give us a chance to head down lower. The same way I showed you guys how the levels break down on the 15 to 30-minute chart, okay? You want to look at it like that today. If we break down those lower levels that I give you guys, there's a big chance we are heading down lower, okay? Do not call a bottom unless the price action starts recapturing lost levels. Triple Q also looking bearish, lost a Fibonacci level around 509, and now we're gapping down much lower. Like I said with SPY, you don't want to trust a bounce unless we get some false breakdown setups, recapture of lost levels. Right now, I have 502 and 503.7. Okay, 503.7 being the fib level. Those levels must recapture to put 505, 507, 509, and 511 plus all back in play. Okay, next support is at 500.5. If we break down that level, guys, then don't argue with the price action. I know it's looking very bearish in the gap and crap. It has to bounce. The market does not have to bounce, guys. The market makers are very manipulative to us, so they're going to do what they want. And if 500.5 breaks down, we're heading down lower to 499, 497.8, and 496. Don't fight the price action. Just go with it. Go with the flow and make your money, all right? And like I said, if it is a bounce time, 502, 503.7, and 505 must recapture to put those higher targets in play. Tesla's looking bearish as well. I mean, this stock been looking bearish for quite some time now. I do have a fib level at 384.5 and then 386 above that. I'm not trusting no bounce unless 384.5 and 386 can recapture to put 388, 390, 392 or higher in play. We need to recapture some lost levels. Otherwise, if we break down support, I have support at 381.5 and 380. If those levels fail, 378, 376 or lower incoming. 373 is a big possibility as well if those support levels fail. And that's like another $10 drop. Okay, you want to pay attention whether to the upside, to the downside. All right, 384.5 and 386 must recapture to trigger longs. But if support fails, 383, 381.5, and 380, more downside incoming. NVDA, holy moly, donut shop. I have a fib level at 133. Trust no bounce unless 133 and 135 can recapture to put 136.8, 138, and 140 in play. Maybe a bottom can be in if 140 recaptures. Otherwise, stay bearish below 133. And if 130 fails, we're heading down lower, all the way down to 127, 125, or lower. Okay, guys? IWM is looking bearish. I have a fib level resistant at 215 and 217. Trust no bounce unless those levels can recapture. Stay bearish below 215. Supports are at 213 and 211.8. If those levels fail, more downside incoming down to 210, 207.8 or lower, guys. Look to react. Look to react. Apple. Wow. Finally. Finally. I honestly I thought we'd get a bounce, but I was wrong. But finally, we broke down this trend line. We tested it, and it broke down. That looks bearish to me. Next support is at 233.7, 232, and 230.7. Those are the next support levels. If they fail, more downside incoming. Trust no bounce unless 236 and 237.5 recapture. You heard me. Those are the levels I give you. Put them in your charts. If they recapture, I would trust the bounce more to 240, 241.7, 243 plus. Okay, but overall, it's looking bearish right now. Amazon, ever since we had that false break, that was a beautiful false breakout, wasn't it, guys? I think it was a beautiful false breakout. We built this flag. We gave us the breakout. People were excited. I was excited, but then womp womp. False breakout. At this point, you can't argue with the price action. You got to take what the market gives you. And you can see now in hindsight why false breakout setups are bearish. It leads to more downside. Right now, we're around 217.2. Next support is at 216. If it fails, more downside incoming. There is a nice gap at 213.5 that needs to get filled. It doesn't need to right away, but maybe if we break down 216 today, it can finally fill it with 211.5, 210, and 208-ish. Another gap to the bottom. All right. If we are to get a bounce, then as usual, loss levels must recapture. 219, 220.6 must recapture to put 222 and 223.6 in play. I will not favor a bottom is in unless 223.6, the fib level, can recapture. Meta is wild. Meta is wild. But right now it's around 611.5. Yeah, I have next resistance at 612, 614, and 615.7. Those levels must clear for more upside. If it's the plans to the bottom, then 610, 610, 608, 606, 604.5, and 603 all must break down to put more downside in play, okay? Microsoft closed right at the multi-month trend line that I had, but it's gapping down. You guys, the breakdown of the multi-month trend line was around 419-ish. We're gapping below that right now. Guys, this could be a bearish breakaway gap, okay? The overall, though, Microsoft needs to stay below 419 or 420.8 highest to stay bearish, okay? Bearish follow through, breakdown 415. If it breaks down 415, then more bearishness, more downside incoming 412.5, 410.5, and more downside incoming 409, 406, and so on. Okay? But I will trust no bounce unless those loss levels can recapture 419 and 420.8. I do have 417 as resistance as well. So 417, 419, and 420.8 must recapture to be bullish. Otherwise, if we lose 415, more downside incoming. DXY looking bullish AF, man. That's why I like looking at DXY. Like, it helps me gauge SPY. Like, I don't trade this, but when it's bullish and SPY is bearish, it helps, gives me a little more confident in my position, you know. But right now, it's trying to break out 110. I have no levels until 111.5. If we can clear 110, I have nothing till 111.5. I doubt it's gonna go there right away, but you never know with the market, right? Especially during election season, Trump is coming back. You know, anything can happen with during presidential year. You know, but we'll see. Oh, but the bottom line with DXY above 110 is bullish. I can't trust no pullback unless 109.5 and 109 can break down. Okay, coin. Did I mention how much I love this stock? Like even when it chops, it's still tradable. I mean, it's kind of expensive, but hey, it's the price you pay for volatility. Resistance right now is at 249 and 250.7. I'm trusting no bounce unless those levels recapture to put 252, 253. I think we can get a bounce all the way up to 258 if those levels can recapture. Above 258, I feel a little more bullish and favor more upside. Otherwise, if we break down 246, so 247.5 and 246 are support. And if those levels fail, guys, 244, 242, 240.5, and 239, possibly even lower, will all be in play. Doge is looking bearish. They broke down this fib level that I had, the fib level around 34 cents. Broke it down, retested it as a resistance. Now it's trying to break down next support at 32 cents. Below 32 cents, I have 30 and 28 cents as next target with 26 below, okay? I will not look to long unless 34 cents can recapture. Could be building a bearish trend, okay? Based on this pivot high right here, this could be a lower high. To invalidate that, 34 cents would need to recapture. And if it does, I would look to long and I'd play it up to 38 and 40 cents and leave a runner. But otherwise, it's looking bearish, guys. Bitcoin's looking bearish right now. It's finally trying to break down that supply zone that I had. As long as below 92.2K, I'm favoring, we go test 89 and 86K. All right, I'm trusting no bounce unless 92.2 and 94K can recapture. All right, that's all I have for you guys this morning. Good luck this week. And yeah, guys, check out the pinned comment below if you guys thinking of joining my Discord. Okay, use the coupon code. All right, love you guys. Peace.